This is Alan Bush with ADMIS. In the stock index futures, we did see quite a bit of pressure yesterday. Some of this was linked to reports that Russian courts are paving the way for Russia to seize assets of foreign companies in Russia. This in response to the sanctions over the Ukraine situation. Today, futures a little more steady. Still feeling that overall, that anytime there are geopolitical risks and pressures developing from any of these problems worldwide, that the pressure will only be temporary, as has been the situation over the last 5 years since this bull market first started in March of '09. So longer term, still looks like futures are headed higher, especially with rates as low as they are and are likely to stay low. So I think we will get through this current situation, the current pressure. Ultimately, I think we will see more strength longer term for stock indices, especially for the S&P and the Dow. Over in the currencies, the dollar index remains very close to a 4-year high. Interest rate differentials continue to underpin the US dollar against other currencies. Some pressure in the euro currency today, this after German consumer confidence falling to its weakest level since February. Also some weakness in the pound. This after London home prices falling for the first time in 2 years. And pressure in the yen. This after inflation numbers in Japan coming in weaker than expected. Also, we are seeing the pound and the Swiss franc continuing to gain on the euro currency, which is a trend that I think is likely to last for a very long time. So from here, look for the dollar to remain firm, the euro to weaken, the Swiss franc to weaken the Japanese yen to weaken as well. Over in the interest rate markets, we are seeing futures a little bit lower. Over the last week or so, we did see a very nice recovery. Some of this linked to ideas that dollar strength could cause the U.S. economy to slow, which in turn will put downward pressure on interest rates. So there is finally starting to be some concern about dollar strength as far as how it may affect the U.S. economy. Longer term, still feel that the main trend for the long end of the curve is higher, mainly for the 30-year bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.